This video will be on the budgeting feature of CenterPoint and will cover the topic of entering in a basic revenue or expense without management details. And without management details, that means not allocating that revenue or expense to different management details, such as a profit center, if you are using the agriculture or business product. If you're in the fund product, that profit center is equal to a department in the fund product. Okay, and that also includes not allocating those details to different production centers or what was called locations in the business and fund products, and even to different projects. So any of those management details. Now, from the video on starting a new budget, you learned how to select what kind of budget you wanted in terms of whether or not you wanted each of the values to offset to cash or whether or not you wanted it to be open entry. I am going to show you the basic revenue or expense both ways and how it affects the other financial statements. I'm going to start out with a budget that's been set up to have the property of offset to cash. So what I mean by that, if I go back to the budget properties by going to File and Properties, on the Entry Mode tab, I have selected the option for Journal Entry Offset to Cash. Okay, then I'll go ahead and show you the same feature using the option of an open entry. Okay, and how it affects everything. So down, we do all of the budgeting on the Flow of Funds tab. So down at the bottom, we have our 3 reports. We have the Flow of Funds tab, the Balance Sheet tab, and the Income Statement tab. Okay, I'm going to be working on the Flow of Funds tab because that's where we enter in all of our budget figures. So I'm going to put in an example of a basic expense. We pay building insurance on a quarterly basis, so we need to put in a budget figure for each quarter of 2022 here for business, for building insurance. So I'm going to take and collapse up revenue and collapse up cost of goods so that I can easily see my expense accounts, and I'm going to come down here to insurance expense. And I need to budget for $350 in each quarter, the end of each quarter. So entering in those values is as simple as typing in the value into the cell there. It acts just like a spreadsheet. So it's as simple as just typing the value right into the square there. Okay, so I'm going to go ahead and put $350 into each quarter of 2022 here, and our last one being in December there. Okay, now how that affects each of the months or each of the reports is this particular insurance expense of $350 using the method offset to cash on the same flow of funds. If I scroll down here past all of my income statement accounts down to my balance sheet accounts, so down below all the income statement accounts, we have all our balance sheet accounts. We can see that those same $350 entries are causing a decrease in cash of $350. Well, that's going to flow through to my balance sheet. So I'm going to click over here on the balance sheet tab. And you'll notice if I go ahead and point out here in the between the months of February and March, you'll see that we went ahead and decreased the bank account by the $350. Okay, and then we once again see it go down in June, and then once again in September, and then again down in December. Okay, so it goes and it takes and it at least gives you a balanced balance sheet and kind of gives you an idea of what is happening to your cash for cash flow purposes. Okay, then if I come over here to the income statement and I once again go ahead and collapse up my revenue and my cost of goods, you'll see here if I come down to insurance expense that it is going to move that $350 to my income statement. So we'll see that on the income statement. Okay, so that is what happens when you're using journal entry offset to cash. Now I'm going to take and move over to the same budget, but just using a different method. And as you can see here, up at the top, I have this one labeled budget open entry, but it's basically in the same database, same accounts and everything. If I go to file and to properties on this budget and go back over to that entry mode tab, you'll see that the entry mode that I've selected is called open entry. Okay, so I'm going to do the same thing. We're going to put in the same $350 building insurance expense into each of those quarters. So I'm going to collapse up revenue, collapse up cost of goods here, and once again, come down to my insurance expense. And we're just going to put in $350 into each one of those quarters. So I'm going to come over here and put in $350 in each of those quarters. Okay, I could have also copied and pasted them into those individual quarters. If you need to copy and paste a value, let me go ahead and I'm just going to delete out this one. I'm going to set that one back to 0 there. We're going to set that back to 0 there. Okay, so let's say that I wanted to copy this value there. I should be able to go to edit and copy to clipboard or do a Control-C. And then over here on the month of December, a Control-V should allow me to, so V is in Victor, a Control-V should allow me to paste that into the cell. Okay, so that is something that I could have done on those other entries as well. Okay, now using this open entry, we don't have anything offsetting to this. So we're not looking at creating a balanced balance sheet, because if I go down here to the cash, okay, we're going to see that that $350 didn't create any kind of an entry to the cash. Okay, therefore, it did not affect my balance sheet. So when I go over here to the balance sheet, you'll see that it did not change the cash levels on the balance sheet. So if you're using open entry, you're primarily just interested in budgeting all of the income statement accounts, and you're not necessarily looking for a balanced balance sheet. Okay, but it does go ahead and it does, if I go over here to the income statement, it does flow through to the income statement just like the previous entry had done. So if I come down here to insurance expense, it does flow through to the income statement. Okay, so that's how we enter in. Quite a bit of our budget will be entered in on lines such as that, where you're just entering in a basic expense like that, not allocating it, especially if you're not allocating your budget to any of those management details. Now, if you're budgeting and wanting to allocate that expense to management details, we have separate videos on those particular topics. Also, if you're budgeting to something like a revenue account, for example, that should be adjusting in inventory, then you're going to want to look at detailed transaction entry. And there is a video on detailed transaction entry as well.